Looking at the retail sales scenario in South Africa, slightly disappointing, 1.5% contraction for the month of February. We had expected a growth of 0.6%. We contracted by 1.7% in January. So clearly the consumer is still under pressure, and this perhaps sets the case forward that we were supposed to see that interest rate cut that many economists hadn't expected at the previous MPC meeting.
Not really. We'd expected the cut far earlier on than the MPC did the past weeks. But the reality of our story is a very interesting one, because we all know that the consumer is well stretched, not only in terms of her high indebtedness, but also the cost of doing business in South Africa. The electricity tariff is high. Secondly, there's been a lot of benefits that have been cut by SARS, whether it's a motor car benefit and many other fringe benefits that are highly taxed at the moment. And going forward, with the municipalities also being under pressure with the strike that we're seeing in the sector, expecting that the municipality may pass the cost of labor back to the consumer again. So the consumer is becoming more and more wiser, which is very, very encouraging, that you have now to plan long term. You can't be beaten twice, as Mr. Klinos was saying earlier in the picture that we saw.
Lumkile, why do you think economists got it so wrong, though? Because we thought we would see growth of 0.6% and we're contracting by 1.5%. And as you well mentioned, the South African consumer is perhaps being more prudent in terms of how it spends its money.
There's been so much bad news in South Africa, ranging from various things, from the politics to what is happening elsewhere. The reality is that we economists are very optimistic. So we always see the bright before everyone sees it. So I think there's a lot of positiveness among economists. And they think that things are turning around. They are turning around, as we've seen with the motor car sales. But more importantly, also with the loan coming through from the World Bank, it indicates that going forward, with the economic rebound, South Africa will be able to meet some of its energy demands.
I think also just looking at the economic data that we see on a global level, South Africa is lagging behind the developed world. I mean, we saw US retail sales for March, a gain of 1.6%. So that coming in better than expected. Do you think that it's a sign that the US consumer is in fact recovering? We know that the numbers that come out of the US relatively volatile, and we shouldn't be reading much into it, is what many economists say.
Well, remember that Europe and America put so much money into the economy, from euros to dollars to pounds. So therefore, it had to come right eventually. So the fact that the consumer is coming back there indicates that, also that there's a huge recovery taking place there. However, we still question what will happen when the stimulus is removed. So there's still a lot of uncertainty going forward. I think we must take the positive and enjoy it while it lasts, but we could get a shock in the next few weeks and months as the governments get out of putting money into the economy.
So you're saying, Lumkile, that once we see the removal of the stimulus, that the global economy won't be able to stand on its own 2 feet?
Well, I'm saying that what we'll see is the reality, because it's artificial at the moment, government intervention. When the markets come back, when we allow the free market to operate, it remains to be seen how sustainable will be the recovery going forward.
Yeah, many economists do say, and investors do say, that the recovery is quite fragile, and we've got to be careful in terms of what we'll be seeing on the monetary policy stance. Interesting to note that China's growth, 11.9% for the first quarter of 2010, but we're still seeing reluctance by this government to remove any kind of stimulus, which really shows that we do have to be relatively cautious about the sustainability of the recovery.
Well, in fact, for major markets, I think the story is still very, very bright. That is why, in fact, in the summit that we're going to be discussing shortly, it's very important for coordination among major markets, because there we still have lots of inequalities, particularly with the low-income people who would have to be brought into the labor market, and in the process create demand in these economies, and therefore see some growth going forward. So the story, I think, for the developed economies, we're going to see some volatility when the stimulus is removed. However, in the developing world, in the emerging world, we still see some growth, particularly in the Brazil, the African economies, as well as to an extent the Chinese economy, despite also the support that we've seen coming from government in that economy.
Looking at the equity markets, JSE all share at around 29,500 points. We're steaming ahead, and we're really taking cue from what we've been seeing in the US, because the US is above 11,100 points, and it's really got to do with some positive numbers that we've seen out of some companies in the US, Intel, Alcoa. Slightly disappointing. JP Morgan came out with some strong numbers in yesterday's session, and also said that they plan to hire around 9,000 people, which of course is a good sign that unemployment in the US will come to an end hopefully soon. But Lumkile, at the end of the day, many say that we have seen the markets overrun quite significantly. Are you of the view as well?
I'm very much of the view that, the overrun. However, I'm very happy because privately I'm all on equities. So I'm very excited.
Are you going to be cashing in, Lumkile?
I won't cash in. I'm a long-term player, but so I'm still very optimistic that things will come right. So I don't play the market, but I take a long-term view that the markets will continue to outperform bonds. We always, people have been talking that the bonds will come back, but I still believe that equities will continue outperforming the bonds. So I'll remain long on equities.
Well, just taking cue from your excitement about equity markets, I'm assuming you started accumulating last year, March, during those lows.
No, I had, in fact, when the market dropped, I stayed the course because I believe that I'm a long-term investor and I believe that markets will do very well. And with the move before the crash of companies listing is very good because then governance improves. And so, the push is that when there's stability, we may see some companies coming back to the market to list. And as they do, then we can continue monitoring what's happening. And then we believe that, they'll continue producing good results. And therefore, some of us getting wealthier who are long in equities.
The IDC and the UIF teaming up together to try and combat unemployment, and you're launching a project worth 2 billion rand. Give us some insight into that.
Well, we've learned a lot from countries like Brazil, particularly what the Banco Nacional de Development e Social Dependência, which is an equivalent of the IDC in Brazil, which is an instrument of growth for Brazilians, where the state works very closely with it to try and offer lower cost of funding. And this is an attempt to lower cost of funding, targeting unemployment or targeting to grow capacity and employ people by offering companies a lower cost of funding. So the challenge for us is going to be whether we can be able to effectively deliver on that, given the fact that South African industries are still very skeptical about production due to the fact that the currency is making it quite difficult for them to export.